is. But first, we got to break down the market action today on the Dow. When the Dow was down over a full percentage point. Kim Forrest is Fort Pitt Capital Vice President, Senior Equity Strategist, who says volatility in the market, well, get used to it. And after all, it ain't such a bad thing. She'll tell us how to play it. And Larry Shover, SFG Alternative Chief Investment Officer, is in the pits of the CME. Larry, I want to start with you. General question, what spooked the market?
Well, it's clear that China's PMI miss drove the market narrative today. But let's be fair, the street was building that in. They realized there would be a softening. And not to mention that we had small beats out of the PMIs in France and Germany. We had a good GDP number come out of Spain, and the U.S. had a decent existing home sales number. We haven't had a good home number in quite a while. So actually, David, it really is just a lot of consolidation, digestion, people making excuses on why the market's moving. We're just waiting for the next thing to drive us one way or the other.
All right. Well, China certainly drove us. And Kim, you say, very interestingly, I think that you say that the market's reaction to China's numbers are a good thing. Explain.
Sure. Well, unlike last year where the market went up relentlessly, which as an investor I like, I get it. I want my account to have more money in it tomorrow than it does today. But as a stock picker, I really like when markets react to new information in at least the correct direction, if not magnitude. They'll miss on one of those two, right? So seeing them react to earnings announcements and things like the PMI miss in China, those are very encouraging for me because the markets are reacting like markets are supposed to be reacting.
Well, is this kind of volatility that we've seen so far in 2014, particularly days like, do we have to get used to that? Is that going to sort of be the hallmark of 2014, Kim?
I think so. Last year was a very flat year. I mean, the market went up, 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 and up, which, again, if you're looking at your statement at the end of the month, you like. But if you're trying to buy stocks at a reasonable value, it's not a great market for you. So I think that 2014, with the taper actually occurring and investors processing that information, that people have got to get used to the regular amount of volatility that's in the market.
Okay. By the way, we're processing information coming out of Microsoft, figures just coming out of Microsoft right now. After hours, the stock is trading up. It ended today at $36.06. It's now at $37. That's the bid after hours. Dennis Neal, how do the numbers look?
The numbers look awfully good for an upside surprise for such a big and such an old tech company. Wall Street was looking for earnings per share of 68 cents. That would have been down 10% from a year ago quarter. Instead, comes in 78 cents, up 2 pennies from a year ago quarter. So it grows instead of shrinking 10%. Revenue coming in better than expected. The Street wanted revenue to climb 10% from a year ago to $23.68 billion. It comes in $24.52 billion, almost an additional $100 million more than Wall Street was looking for. Now we're looking for details on key pressure points in the company. What happened to PC sales? Estimates are they fell 20% in the quarter, in part because PC wasn't stoked by that Windows 8 that a lot of people don't like. What happened with business software sales? I just saw a number look like business software might be up 10%. That will be a surprise good. And we want to see Xbox One sales, and we want to see what happened with that Surface, which has been a very troublesome tablet with a keyboard to it, but they're hoping for better results and an improvement on the second release of that. Microsoft gets a lot of stuff wrong first, eventually gets it right.
That's a good point. By the way, last quarter, they sold 900,000 of those Surface tablets. This quarter, some people are expecting 1.4 million units sold. So that's good news so far, Larry Shover, what we've been hearing from Microsoft, and you can see it reflected in these after-hours numbers. But I got to say, one stock that we haven't mentioned in the top of the hour was Nokia. Nokia handsets, very disappointing, particularly in light of the competition with Apple. And, of course, Microsoft bought into that. That may be an albatross that they have to live with, right?
Yeah, it could be. And look at the performance of Microsoft the last quarter. It basically has done nothing. There's so many unanswered questions. The acquisition of Nokia, that's definitely one of them. That's something that really concerns investors, but they're also worried about the Xbox One performance versus Sony PlayStation 4. And to mention that Dennis brought up about the Surface tablet and holiday sales, not to mention the CEO. There's so many questions. A great company, but not doing a whole lot of anything. A lot of questions have to be answered first before I would invest in Microsoft.
Okay, well, I want to tell the director to keep that Microsoft numbers on there. I want to go to Kim, though, talk about another stock as well. Let's just talk about Intel. Sort of in the same spot that Microsoft is. Intel and Microsoft have relied so heavily on PCs, but PCs have gone down so much. Is that a problem? Right. Quickly, Kim.
It has been a problem, but I don't think so. I think both of these companies were extremely late to the mobile party, and I think we're going to see encouraging things in 2014.
Okay, I wanted you to hurry up because we have the Starbucks numbers, and we'll get back to Microsoft, see how that's doing. But Joe Lincoln has been following those numbers of Starbucks. A lot of concern there with Starbucks, and indeed, after hours, the stock is trading down. Joe, what do the numbers look like?
Yeah, stocks are actually down 1.5% right now. Dave, taking a look at the numbers, EPS came in at 71 cents per share. That's actually a beat on the 69 cents the street was estimating, and then revenue came in at $4.24 billion, which is a miss on the $4.29 billion. Now, taking a look at same-store sales right now, America's sales were up 5%. They were expecting mid-single digit, so that's pretty much in line. Now, taking a look at global same-store sales, that was 5% up. That is a miss on the 5.7% that analysts were expecting. Now, in terms of back to the domestic sales, traffic was up 4%. And looking at the outlook for this quarter, 54 to 55 cents per share is the outlook for this quarter. The estimate, though, was 56 cents, so that is a lowering. It's not beating the expectations there. Again, stock down more than 1% in after hours, Dave.
Larry, I got to tell you, I'm a little impressed by the U.S. sales because they had two things going against it. One, the weather. A lot of the malls have seen very light traffic because of the weather. And, of course, also Internet sales. A lot of people not going to the malls because of Internet sales. And they rely so heavily on the sales from the Starbucks that are in the malls. I thought that they'd be hit harder by that. Apparently not so.
Yeah, and I'm surprised with you on that. One thing about Starbucks, I love the company in general, but they've relied on doing a lot of what have you done for me lately, whether it be whether it be putting Starbucks in supermarkets, whether it be expanding overseas, which they continue to do. They have to beat even the best expectations for the stock to go forward. I mean, revenue growth is good, but their profit margin continues to shrink on hold. Their net margins are shrinking. So they have to build themselves exponentially for the stock to continue to be the stock that it was even a year ago.
Okay, let's go back, Director. We're going to go back to Microsoft. Dennis has been looking through those numbers a little more carefully. What have you seen, Dennis?
So a couple of other upsides. Device hardware sales, which that may include that Surface. I can't find a unit number yet, but dollar revenue really up hugely from year ago quarter. Year ago was $2.8 billion. Now it jumps to $4.7 billion. That also could include Xbox. Meanwhile, Xbox One, 3.9 million sales in the quarter units. Now, was it maybe 3 million by Christmas, they thought? So that looks like a nice pop. But also 3.5 million Xbox 360s, the older product around the world, also sold. So that's a nice number of 7.4 million Xboxes combined. And Bing search. Let's remember, the Bing search engine goes from basically zero a couple of years ago up against Google. Bing's share rises to 18.2%. That's no slouch against Google in search ads. And ad revenue search on Bing up 34%, Dave. Okay,
and as you can see, the stock is trading about 4.5% to the upside after hours. So some very good numbers for Microsoft. Go ahead, Dennis.
And that stock was up 44% in 2013. I just checked it. So another 4% on top of that. Not bad.
Not bad at all. Kim Forrest, let's go back to talking about China for a second, because two of your picks, we talked about Intel a bit, but Boeing and Honeywell depend on world growth, world economic growth, and we've seen this China slowdown. Are you still sticking with these companies?
We are. Not only is it China, which is a big part of the emerging world, and the emerging world getting richer and thus wanting to travel either in country or to other places around the world, but it's also a matter of the new planes are very energy they sip oil as opposed to, burning a whole bunch of oil. So we like that for the developed world to be part of the story as well. And I don't think you should ignore that part of the story, because the developed world still buys planes.
Kim Forrest, great to see you, Kim. Thank you very much for
Thanks for
rolling with the
having me.
punches here. A lot of fast information flowing furiously from Fort Pitt Capital. Kim Forrest and, of course, Larry Shover. Great to see you, my friend. Appreciate it.